You've never really understood why it's necessary to record invoices that haven't been paid yet, or even ones that a company hasn't received yet. This video will help clarify this point for you. The term accrual accounting applies to all business entities that are required to prepare annual financial statements. To prepare these, the accrual accounting principle must be applied, as opposed to the cash accounting concept, which is reserved for non-commercial entities. The accrual accounting principle means that the triggering event, and therefore the obligation to record an item, is the commitment made by the company, regardless of whether payment has been made. Thus, all transactions that have originated over a year, which we will call year N, all such transactions must be included in the accounts for that year. For example, if a company receives an invoice in December, even if that invoice is paid in January of the following year, the invoice must be recorded in the accounts for year N. A liability will also be recorded at the end of the year N to show that certain invoices received in year N have not yet been paid, but that the company is committed to paying them. The same applies to invoices issued in year N to clients, which will be paid to us the following year. This allows us to clearly understand the difference between cash flow and profit. In our case, the cash flow for year N is not affected, since the payments will take place the following year. But the profit for year N is, however, impacted by the amount of the commitment made. However, the accrual accounting principle goes further and requires recording transactions that have been committed to, even if the accounting documents have not yet been received. Let's take the example of a company that hires a lawyer to carry out a legal assignment at the end of the year N. It is entirely possible that at the end of year N, we have not yet received the invoice from this lawyer. The accrual accounting principle requires that this expense be recorded in the accounts for the fiscal year during which the legal assignment was performed. Year N in our example, regardless of the date the invoice is received. Thus, at the end of year N, the company will have to record an expense for the expected amount and a liability for the invoice that has not yet been received. The invoice will be received the following year, but the impact on expenses will indeed be for the fiscal year N, because it is during this fiscal year that the company made the commitment to its lawyer. Of course, accrual accounting has certain limitations and requires precise and rigorous accounting follow-up, which can sometimes be a bit burdensome for some small businesses. It is important to understand, when reading a company's accounts, to keep in mind that they have been prepared according to the accrual accounting principle in order to analyze them correctly and to fully understand that profit and cash flow are two different concepts, especially because of this accrual accounting.